Hello and welcome to the weekly market update. We are going to talk in brief about the coronavirus developments which are affecting the markets again, and then highlight the top economic events for the week and go over some of the major charts on the MetaTrader 4 platform. So first, let's start with the COVID-19. The cases are closing in to 9 million, with the past 24 hours recording more than 183,000 cases, which is a record high, and the majority is in South and North America. The total recovered cases are around 4.5 million, which is almost 50%, and deaths are around 468,000. The World Health Organization chief stated that the pandemic is still accelerating and its consequences will remain for decades. Some of the governments are preparing for a second wave, especially in the United States. The White House officials stated that there are preparations for a not-in wave and second wave in the fall. However, also recently in the United States, in the past couple of days, the cases rose significantly. And some businesses closed also their doors again. Apple noted on Friday that it's closing its stores in states with increased COVID-19 infections, and the headline had a significant impact on the market as soon as the headline was on the market. Major indices, major US stock indices were selling off. So this is showing how the market is vulnerable to COVID-19 developments. On the other hand, the European countries continue to ease restrictions and open borders, preparing for summer tourism despite slight rise in cases in the past days, especially in Germany. Also, Beijing, which was lately like having some fears of having another serious outbreak, reported that the latest outbreak is under control, which was also a little bit positive for the on the headlines. So please make sure if you want to if you are trading any of the, especially indices or any risk sensitive currencies like the Australian dollar and others, please make sure to keep up with any headlines about coronavirus that have to do with the business closure, since they will have a clear impact on the market. So it doesn't matter about the numbers, but it matters whether the governments will force businesses to close activity again, which could have also a catastrophic effect on the economy. So this is for COVID-19. Moving to the top economic releases for the week, the calendar is a bit shy. Tomorrow we start with the preliminary reading of the manufacturing and services PMI from the Eurozone, United Kingdom, and the United States. A rebound is expected as life is coming back to normal. We can see here numbers back above, expected to come back above 40, 45 level almost. So it depends on the sector and on the region. Also, during the European session, the Bank of England Governor Andrew Bailey will be speaking at an event in London. Any headlines concerning the monetary policy could have an impact on the market. It's good to note that last week the Bank of England kept interest rates unchanged at 0.1%, but increased the quantitative easing or the asset purchases by 100 billion pounds to 745 billion pounds in order to support a better economic recovery. As we head to the United States, where we have the new home sales for May month over month expected to rise of 3.5% from 0.6% back in April, and we end the day with the American Petroleum Institute weekly crude oil stock. So this is for Tuesday. On Wednesday, we start early with the Reserve Bank of New Zealand. No changes expected in the policy settings, but the bank also is expected to express the commitment and readiness to do more to support a rapid and robust economic recovery. Maybe they won't talk about like if there were some measures to be taken to support the economy, the RBNZ could expand the asset purchases and not change the interest rates. Or so this is one of the key talks and the Reserve Bank of New Zealand meetings. So this is for the RBNZ on Wednesday. The decision will be followed by a presser by Governor. During the European session, the German IFO business climate will be out, showing a nudge higher to 85.0 from 79.5 back in May. Crude oil inventories, also the weekly oil report by US Energy Information Administration, expected to show a slight drop by 152,000 barrels in weekly crude oil inventories from a buildup of 1.215 the week prior. So this is for Wednesday. On Thursday, we start with the German consumer climate. GFK consumer climate for July, expectations of a rise towards -12 from -18.9, a little bit of improvement in the consumer climate in Germany. Also moving to the United States, the final reading of the first quarter GDP from the United States, no change is expected, 5.0%. The final reading GDP price index is expected to come in at 1.4% versus previously 1.6%. Durable goods orders a pickup or a build up to 11.2% from a negative 17.7% back in April. And the initial jobless claims, which was pointed last week, are expected to come at 1.3 million versus 1.508 million last week. Also, the final results of the US bank stress tests will be revealed. It's a very good mover for stock traders, especially those who trade financial stocks or stocks for banks and financial institutions. So this is for Thursday. And moving to Friday, the list is short also, with the core PCE personal consumption expenditure index to be out. It's one of the Fed's favorite gauges. A rise of 0.2% expected versus negative 0.4, a slight improvement in PCE, which could have some effect on the longer term vision of the monetary policy by the Federal Reserve. Also, one of the key indicators for the week, the personal spending for May. That's one of the key indicators to check how the economy was performing during the second quarter. So a better than expected reading or could have a significant impact on the market. So economists are expecting a reading of 9.0% from a negative 13.6 previously. Also, the final reading of the Michigan consumer expectations for June expected to come in at 73.1, similar to the preliminary reading. And we end the week with the US Baker Hughes oil recount, which came in at 189 last week. A drop from 198, showing that despite the recovery in oil prices and surge in oil prices, some producers are still closing activities. So this is for the top economic events for the week. We're gonna go over some of the major charts to assess them. So first, let's start with the dollar index. We're seeing a little bit of a sell-off. So what's happening lately is that it's a risk-on, risk-off trading environment. When the risk is high in the market, there are news about higher cases or maybe some prospects for closure of business again. Investors are rushing towards safer currencies such as the Japanese yen, Swiss franc, and even the dollar. So these three are benefiting from risk-off environment, and on the vice versa, when there is risk-on trading, the commodity currencies such as the Australian dollar, Canadian dollar, New Zealand dollar, and also European currencies like the euro and the pound are benefiting on risk-on trading. So this is the scheme for the FX market. Mainly we are trading here. There's this channel combining these highs and lows for the dollar. Currently we were able to break below it, so it's a significant break as sentiment has been restored during the early trading hours of the week. So this is for the dollar index. A good support zone could come in at 96.73 and again at 96.35 with the key area which is the low on June 10, 95.55. So these are the key levels for the dollar index. If you're trading the dollar index, these are the key levels on the downside, and on the upside we need to clear back above, at least to get back inside the channel. So we need to go above So I need to go above 97.40, and in case of an elongation, we could retest the top of the channel, which could come in at 97.90 or 98, which is also an expansion for the Fibonacci retracement on which is also an extension 23.6 for the Fibonacci retracement 98 level. So this is for the dollar index for those who are trading the dollar index. Let's apply some of the technical indicators to see what we can have here. As you can see, the price was holding at the 100 and 200 hour extension moving average, one time rebound, second time and third rebound. The volatility is changing. We're seeing the Bollinger Bands are closing into each other and then diverging, and now they're diverging with the prices closing below dropping below the 100 and 200-hour exponential moving average, and the RSI is approaching the oversold territory near the 30 level, which could accelerate the move lower. So this is for the dollar index if you are trading the dollar index. Let's move to the euro. So we're gonna start with the daily chart. We had a series of down days for on Tuesday, Wednesday, Thursday, and Friday. The euro was dropping, and then the dollar was gaining against it. But today, as things started to reverse, with the risk sentiment being restored, we've seen the euro approach advancing against the US dollar, even recovering more than almost 23.6 retracements. So it could have some minor resistance at the 38.2, which comes in around 12.7. We're gonna show you also this level in a while. So this correction almost stalled near the 38.2 retracement of the latest swing higher, and we're currently trading between the 38.2 and 23.6. If we have a closer look on the hourly chart, we can see that we're trading in a falling wedge. We're currently almost near the top line of the wedge, and also the market bounced from its bottom. So mainly this is the setup for the euro dollar. If you're trading if you're long on the euro dollar, you have to expect some resistance near 1350, 1347, and a key resistance could come in at 1420. And for support levels, the minor support, or even it could be considered as a pivot, is 1205, which was the low on June 11, and we currently had some activity around it today before breaking up higher. So this could be acting as a minor support currently if the market goes down again, and another support is near the lows of 1160. So these are the key levels if you are trading the euro from the downside. And on the upside, similar to completely the opposite to the dollar index, we've seen the price rebounding to the 100 and 200-hour exponential moving average, and then dropping from it 1, 2, and 3 times, and currently we are trading above it, and the RSI is approaching the 70 level. So this is for the dollar index. Watch out for any for the euro dollar. Watch out for any significant rally in the euro dollar, as long as the risk sentiment is improving. Moving to the pound, which had some losses last week due to the expansion of the QE by the Bank of England, and its failure to give more confidence to investors that the current monetary policy measures are enough to restore the economic activity in the United Kingdom. So we're currently correcting a little bit of the drop that took place last week. It's very clear on the daily chart. We recovered almost all the losses incurred on Friday, and we're still edging higher. So here, if we go for the hourly chart, we could expect some resistance near the previous low, which also here acted as a resistance. So it was a support, and here acted as a resistance. So watch out for the 24.55 level, which is almost 15 pips away. And the current resistance, key resistance, should come in at 26.85. This is for the week. It's a little bit far. We're talking about 230 pips, but this is for the week. So we could break above this and maybe have some sideways trading, awaiting some fresh fundamental drivers. On the downside, key support at 23.30, which was the lowest level last week, and then the bottom near 22 levels. So these are the key levels if you are trading the British pound against the dollar. Let's see what okay, so we are approaching the 100 and 200-hour exponential moving average. Also, the RSI is almost above 60, which is almost outside of the neutral zone. Watch out for any retest of this trend line, which also could come in at almost 25.40 and coincide with the 200-hour exponential moving average. So watch out for this level. First, the level that we talked about, 24.55, and then the trend line ahead of 26.85 levels. So this is for the pound dollar. Moving to the dollar yen, we didn't witness a little bit much of a move for the dollar yen pair, since they are both gaining on on risk off status, and both they are losing on risk on status, so almost we're having the same movement, so not much of a volatility. And the dollar yen pair, we're almost consolidating. If we go for the hourly chart, we can see a consolidation, a clear consolidation inside this range. So we had a consolidation during the prior week, 12 and 14, 15 of June, and then 12 and 15 of June, and also during the end of last week we had another consolidation. So for key levels, you have to watch out for the break below the previous low near 106.57. So this is a key resistant, key support level. So any break below it could have some pretty good move for the Japanese yen, and any reversal above 1710 could be positive and lead to a higher move towards 107.62. This is for the dollar yen, and on the downside also additional support is the previous low of 106. So these are the key levels if you are trading the dollar yen: 106.55 and 106 level, and from the upside 107.10 and 107.60. So these are the key levels for the dollar yen. Moving to the Australian dollar, all Australian dollar, New Zealand dollar, and Canadian dollar, they have the same setup almost. So we're recovering from the lows, and the previous low here on the Australian dollar it's held. So watch out for this support. It's a very good support at 67.73. And in terms of resistance, you have to watch out for the activity near 69.70 and the previous high of 70.60. So these are the two key resistance levels on any move higher, and on a move lower, 67.75 and 66.83. These are the key levels for the Australian dollar. Watch out for any headlines concerning trade between China and the United States, and also concerning COVID-19, which could affect risk sentiment. The Australian dollar is being so sensitive to any headlines that can affect risk sentiment in the market. So this is for the Australian dollar against the US dollar. We're currently trading inside the bigger range of almost 200 pips. So watch out for support near 67.70 and 66.80, and resistance at 69.70 and 70.60. Moving to the Canadian dollar USD against CAD, also sideways trading here. Watch out for any break below 135.10, and which could trigger further downside towards the 33.57 level. So watch out for this key level, which was the lowest traded level during last week. And also on the upside, you have to clear first the interim resistance of 36.30 in order to have an elongated move towards 36.86. This is on the upside, and if we're able to break above these two levels on any risk off trading, we could retest the previous high of 38.30. So these are the key levels of the USD CAD: support 35, 135, 133.55, resistance area between 36.30 and 36.80, and another key resistance level at 38.30. This is for the USD CAD. New Zealand dollar, also same pattern. So here this support held. It was a little bit weaker than the Australian and the New Zealand dollar and the Canadian dollar, since we retested the previous low. So 63.80 was a good was a good support level. So watch out for any break below this level, and a key resistance would come in here at 65, ahead of another resistance near high of 66.84. These are the levels if you're trading the New Zealand dollar, and support could if we're able to trade below 63.80, next support could come in at 62.40. Watch out for any move after the Reserve Bank of New Zealand. So as we said on Wednesday, early Wednesday, we have the Reserve Bank of New Zealand monetary policy, where the market is not expecting any change in policy. So this is for the RBNZ, for the New Zealand dollar. Moving to gold, which is trading near almost its highest levels. If we were able to break above 1765, we would be trading at the highest level since 2012. We had the highest weekly close since 2012. It's very bullish. We're seeing a series of higher highs and higher lows, which is relatively bullish in the market. We had here this move higher, and then a little bit of a consolidation move, and now we're continuing the move. We're trading at the highest, we're close to clear the highest level posted on the 18th of May. So this is for gold. If we go for the hourly chart here, we can see a series of higher highs and higher lows, which is generally positive in the market. If we can have a bigger picture. we're almost trading inside this channel, which was here a consolidation zone. So watch out for any break from this channel, which combines the previous lows and these two highs. So watch out for this for how the market will react at 1780, 1785 in case we were able to break above the previous high of 1765. Some of the traders are believing that also this is an inverted head and shoulder. This is the shoulder, the head, and another shoulder. So they're expecting also a higher move in price. So this is for gold prices. Let's apply some of the technical indicators. You can see the price is also trading above the 100 and 200 H4 moving averages, and also the Bollinger Bands, they are very wide, and the RSI is trading above 75, which is also bullish. So this is for gold. Watch out for 1765 and 1784 on the bigger picture for gold on the upside. And on the downside, we have to watch out for any break back below 1744, which could trigger a further sell-off towards 1705 level. So these are the key support zones on any move down in gold. Moving to silver, also almost same positivity as gold. We're gaining momentum in silver. However, there are some key resistance levels here. This is the first one, which is near 1815, and the previous top of 1830. So this could act as a key resistance area. Watch out for how the price will react at this current level, and the support zone could come in at 1754 and the previous low of 1680, 1692. So these are the key levels if you are trading silver. The RSI is approaching the 70, Bollinger Bands are diverging away, and the price is trading above the 100 and 200 hour exponential moving out, 100 and 200 H4 moving average. So this is for silver. Oil also, we've been trading near the recent highs, stalled near the 200-day exponential moving average, so we're almost at this top. And also the Bollinger Bands are almost flat here and closing into each other, since traders are awaiting fresh fundamental drivers which could spark another move in oil prices. But also we have to watch out for any headlines concerning any disruption of the economic activity or business activity which could weigh on oil demand levels, which could have also negative effect on oil prices. So this is the only downside which could happen for oil prices. Watch out for any support near the 100-day exponential moving average at 34.45. This is on the bigger picture, and the key resistance near the previous high also here near the 40.70 level. So we are trading outside the range of $6. Watch out how the market will react with the boundaries of this range. If we go for the hourly chart here, we can see that the price, we're having higher highs. Also, the price is trading above the 100 and 200 hour exponential moving average. The RSI is trading near 60. So this could the prices have much more room to rise in case of a positive scenario. So this is for watch out for this key level 40, 50, 40, 70 in terms of resistance, and in terms of support, watch out for any break back below today's low of 39.30, which could trigger a further downside move towards the previous low of 37.30. So this is for oil. Let's finalize with the Dow Jones. The Dow Jones, we're having a serious pullback today in the Dow Jones following last week's Friday's drop post the announcement of Apple that's closing some of the stores in states where COVID-19 cases are on the rise again. So currently we are moving back higher. So also the retracement that we've had during the past couple of hours, the market was able to bounce higher again. So in terms of resistance, we have to watch out for almost the 61.8 retracement, which is also the previous interim high here. So watch out for any break above 25,915, which could open the way higher towards the previous high of 26,350, and then to the previous high of 26,658. So this is if you're trading the Dow Jones on the upside. Watch out for these key levels. And on the downside, we have this level here, which we traded upon during these two drops. So 25,504 and then 25,227. These are almost the intraday levels for the Dow Jones. So these are the key levels. We're currently need to break above 25,900 in order to get some more momentum towards a move towards 26,300 and 26,645, and on the downside 25,500 and 25,200 ahead of a full drop towards the previous low of 24,400. So this is for the Dow Jones. If you're trading Dow Jones, so we're almost currently here in the middle of this bigger range. So watch out for any break above 25,915 or below 25,500 for a bigger significant move. So this is all for today. If you have any questions, please write them down so we can discuss them. So I would like to remind you that all the analysis, opinions, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell a certain financial instrument, and ICM doesn't provide any investment advice. I would like to remind you again, watch out for any headlines concerning any closure of businesses due to the resurgence of coronavirus, since they would have a severe or a significant impact on the market. They're among the key movers for the market along with economic indicators. So all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. Okay, perfect. So this is it for today. On Wednesday, we'll have an educational webinar about Ishimoku Cloud and the parabolic SAR, so you get to know how to use them and interpret their signals, so you can register. Also, if you have any questions, please write an email to webinar@icm.com or support@icm.com, and we'll be glad to help you. So this is all for now. Thank you for joining.